The Chancellor paid a visit to National Grid today, a day when the power on the network failed, a day when we learned the economy suffered an outage of its own. Sajid Javid was putting a brave face on it.
The important thing is that the fundamentals of the UK economy remain very strong. We've got record employment, wages are growing at their fastest rate for a decade.
Are we heading for recession, Chancellor?
I do not expect a recession at all. It's not just what I think. There's not a single leading forecaster out there that expects a recession.
The headline number is grim. The British economy contracted by 0.2% between April and June. It's the first time quarterly growth has been negative since the end of 2012. The services sector, which makes up almost 80% of the economy, barely grew. Construction output fell by 1.3%. And production output slumped, with manufacturing delivering its worst quarterly performance since 2009. The economy is formally considered to be in recession if it shrinks for 2 consecutive quarters or 6 months. The Chancellor believes the economy has already bounced back, and most economists expect a recession will be avoided, although the risks of one are considered to have grown.
Our own view of the probability of a recession next year, 2020, is around 1 in 3, and we're holding that line. We're not changing that. And just to make that clear, that's materially higher than we might normally expect it to be the case.
Sajid Javid used to believe Brexit was a bad idea. He voted Remain, arguing a vote for Leave was a vote for a decade of stagnation and doubt.
3 years ago, you argued that leaving would be a rather foolish act of economic self-harm. Now you're telling the British people that no deal is doable. Why have you changed your mind?
Since the decision has been made, of course, there's been a lot more work done, especially over a 3-year period, to look at how best to exit the EU. And I am confident today, as I sit here, that we can get through no deal.
Are you saying that no deal will not damage the economy?
I'm not planning on any kind of damage to the economy.
Our new Prime Minister has been splashing the cash since he came to power 2 weeks ago. If the economy doesn't pick up again, the government may struggle to find the money he's pledged for police officers, the NHS, schools and high-speed trains.
Will the spending promises you've made happen in the event of no deal?
You will see, because of the strength of our underlying economy, that we will be able to meet the needs of the British people.
But where's the money coming from?
I'm telling you where
it's
the money
is coming
is coming
from growth.
The money is coming from the hard work of the British people.
The Chancellor is optimistic, the financial markets less so. The pound fell after the economic data was released. That's hardly a vote of confidence in our future prosperity.
And Joel is here in the studio with me. Joel, I suppose it's inevitable when we're talking about economic uncertainty that people are going to reach for Brexit as an explanation. But the wider global economy seems to suggest, doesn't it, that there are problems for countries beside Britain?
Yeah, it's absolutely true. It's something that the Chancellor pointed to. Look, the headline figure was awful today, Raggy, but the Chancellor was arguing quite fairly in some ways, that it was also a bit misleading. Sajid Javid pointed out that other advanced economies are also experiencing something of an economic slowdown. I suppose that's true, but many also outperformed the UK in the last quarter. The British economy contracted, as we learned today. The US, the French, the Italian and Japanese economies did rather better than we did between April and June. But the Chancellor was also pointing to other distorting factors here in the UK. He said businesses were stockpiling between January and March, expecting us to leave the EU. When we didn't, they ran down those stocks April to June. That sort of gave a misleading picture, flattered Q1, insulted Q2. But that also you had this issue with car manufacturers who brought forward their summer shutdowns, which meant that in April there was a kind of fall in output. Again, a very, very fair point to make. But these factors don't explain all of the weakness. Look at what's happened to business investment. It slumped really quite dramatically. Look at what happened to the services sector of our economy, which is unaffected really by the stockpiling. It experienced the weakest growth that we've seen for 3 years. And these factors point to a more general loss of economic momentum at a politically, of course, quite awkward time. Now, what happens next, of course, will largely be determined, how many times do we say this, but on the outcome of Brexit. The majority of economists, as we know, think that no deal if we were to leave suddenly and abruptly from the European Union at the end of October, for example, that would cause economic damage. There's a general consensus on that. The OBR thinks such an outcome would blow a hole in the public finances, leaving the Chancellor struggling to find tax revenues. The Bank of England has said already that it thinks that such an outcome would lead to a fall in the pound, a rise in prices and slower growth. That is why investors were selling the pound today.